Hi, I am so happy to be back. We are still on taxation and today we have a juicy one. The one we are talking about today is how do you avoid tax? Tax evasion is actually illegal, but I'm talking about legal ways of how to avoid paying too much tax so that you stretch your money further, have more to be able to invest and grow your wealth. And today, to answer this question, I have with me Robert Waruiru from KPMG, who is Director for Tax and Regulatory. So there's no one who's better to answer these questions for me. And I'm so glad to have you, Robert. Thank you so much for being here. And so yeah, how do I avoid paying tax and what are the strategies people use? And you can use both corporates and individuals as examples.
Okay. To start with, tax, nobody likes paying tax. Let's start from there.
Yeah.
So every day we are looking for ways to minimize your tax liability. And like the word that you used, tax avoidance as opposed to evasion. So broadly, corporates, you'll see corporates using, because the avenues for tax planning are not that many now.
Okay.
Government is getting cleverer as the days go by. So what you will find is that corporates, by and large, tended to use low tax jurisdictions. We no longer call them tax havens. So low tax jurisdictions.
Low tax jurisdictions.
Yeah.
Why they changed? Sorry to.
Well, because there's this frown around, people are frowning upon tax havens. And a lot of people are asking, why should, for example, Starbucks be paying lower taxes than you, Rina Hicks, as an individual? Why? Because they're using tax havens. So there's this move globally around tax morality. It is immoral for corporations to be avoiding paying tax. Yeah? So there's that global movement, we call it tax morality debate. And what you're seeing is that a lot of the former low tax jurisdictions, a lot of investors are saying, I don't want to be associated with these jurisdictions. My board doesn't want to deal with that. So in my view, the days of tax planning are slowly coming to an end because people are becoming more conscious. People are aware that people need to pay taxes.
Yeah.
And so for corporations, that's it's a bit of a tough one there. But for individuals, you've got issues around estate planning, for example, which is something that Kenya, we've not really exploited in Kenya. So you plan your affairs in such a manner that, for example, you've got a trust and you're paying out to the beneficiaries. That could potentially tax plan around your beneficiaries' tax liability. But I have to say, overall, the window for tax planning is narrowing as government looks for more revenue. You all know, for example, you're aware that in Kenya we are paying 45% of our total tax revenues to service our debt. So government is left with 55% to pay salaries and do our roads and hospitals and everything. They need money. Yeah. So it's a tough one.
So they look for any ways to get it. So what strategy can I use? Okay, so fine, I don't earn enough to be able to go and open an account in Mauritius, to kind of get my money there. But I have little money. I have a rental income here. I have a business there, and then I have my little other source of income here. How can I avoid paying too much tax?
So that's an interesting one as well. The way to avoid it, in my view, is first of all start by complying. Because you want to avoid the penalties. We've got a very tough penalty regime. Okay. And then, our Income Tax Act has got a little provision here and there about tax avoidance opportunities, taking out an insurance policy, for example. How do you plan around your investments as an individual?
Yeah.
How are you taking advantage of lower tax regimes? For example, you talked about rental income.
Yeah.
There's a 10% rental income tax as opposed to 30%.
About that, yes.
So there are small avenues here and there where you can take advantage, but I have to say that they're not that many.
Okay.
Yeah.
Okay.
But certainly it does help to talk to a tax advisor.
Yeah, it does, because then you will know what is allowable within the law. Like we're going to talk about rental income tax.
Yes.
In our next video. Thank you so much for staying tuned, guys. You can avoid it as long as you know what the rules are, so that then you're not paying 30% when you can actually pay 10. Or if you're earning 12%, 12,000 or 11,000 and you're paying tax and yet you don't need to pay tax, but you're paying because you think you're supposed to pay. So yeah, ignorance is not bliss, guys. This is Rina Hicks. You are watching MoneyWise, where we create, grow and preserve wealth.